Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This simply Stocks, and I'm live in this live session with you all. Slightly late today because I was mixed up with a lot of stuff, so could not come online around 11:30. But I'm here live at 1 p.m. as promised, so just a little bit later than 1 p.m. So today I would like to talk to you about a number of things. First of all, we'll discuss about the results of Nykaa, how that has went, and the reaction tells us all. But we'll have a deep dive into the results as to how things are panning out there. Plus, I'll discuss about some of the pointers as to why I avoid watching news channels, especially business news channels here in India. What makes me just look at probably uh, other things, or probably just shut off the television altogether and concentrate on what I am doing best with the trading and investment. So we'll discuss about that, and a little bit of discussion about the markets will be there. So we'll have all these topics, plus I'll answer your queries. Whatever queries that you would be having, I'll be answering those. I believe that you have been and you must be trading well and investing well into the market, and hopefully going forward as well, your investment and trading journey will continue pretty well. So kindly do subscribe to my channel, hit the bell icon so you can get my videos straight away when I post it, and do support me on Patreon. Those who are supporting me on Patreon, thanks a lot for being there. So we'll answer your queries as well. So let's just talk about the markets. The markets have taken out one of the very crucial hurdles, and that was 17,500. So that has been taken out. Probably we are headed towards 17,800, and then we would probably witness another fall towards 17,000. So what one needs to do probably is keep on accumulating profits, buy around 17,100, sell around 17,800. That could be a prudent strategy to do at the moment. And even if you sell around 17,800, going forward, you if you get more chances, you sell even more at 18,000, 18,500. Sell your positions and then wait for declines to re-enter the same positions. That would be my call. Another point I want to make here, if you really want to know about results of Kilpes and what I've discussed, do subscribe to Patreon or YouTube membership, and you'll get different access. I put a podcast there, and I'll put up for YouTube members just after this feed as to what lies ahead for Kilpest, and what also a detailed discussion on that has already been done with Patreon members. So you can probably switch there as well. Uh, so coming back to the markets, I believe that the market will remain in a range between 16,900 on the lower end to 17,800 on the upper end. We have to play this boundaries very carefully and start selling at higher levels, and probably buying at when we are at lower levels. So that could be a prudent thing to do. So that's the call on the markets. Now coming back to the two topics. So one of the points I want to make here is I'm not against any business news network, whichever channel that you watch, whether it is CNBC, ET Now, Bloomberg, you want to see CNBC Awaz, there is ET Now, Swadesh, and many other channels, Z Business, etc. But on a holistic basis, I want to just give you a point that. Why it is very hazardous to just follow them and take calls and probably take trading positions based on that is the case that many of the anchors itself on these channels, not one but on different channels, keep on changing their stance with respect to the kind of investment or trading that they are doing. So I would not name anyone, but in one of the cases, what happened was for some of the stocks, platform stocks, an anchor was extremely positive in October and September, and was kept on saying that These are stocks that is not to be sold at all. No matter what happens, you don't sell those stocks and you keep it, and it will keep on moving higher. Yes, corrections will be there. There will be time correction, there will be price correction, but if you keep on holding, you'll make a lot of money going forward. The same anchor changed its stance going forward, and just recently I heard that he was of the opinion of the same platform companies, that everything is good at a price, everything looks good at a price, and you need to keep on booking profits wherever there is possible, when there is exaggeration of movement on the upside of some of the stocks. So a complete change in stance, and I don't blame that person, neither do I blame other anchors or anyone on the televisions. What I want to emphasize here is that you need to have your own way of investing and trading into the market. You need to have your own way of making and churning out money from the market, and you need to find your own way of trading rather than following anyone on any calls. Even if you follow me, if those members on Patreon or YouTube follow me, you're going to lose on many of the occasions rather than win, even though I win, because your risk appetite, your margin of safety, your patience of holding and time frame will always be different from what I do. So even if I give you a stop loss, say in a Reliance of 2200, and if that gets hit, a stock goes down, probably you will not sell, thinking that over a period of time, since it's a big business and a large company and the largest in the Indian market, that should perform well and going forward should end up doing well. So I'll not sell and I'll hold, and then eventually you end up paying a heavy price and the stock goes to 2000. Or on the other hand, I don't make money and you end up making money by the stock going to 24, 2500. So basically, one part of the decisions are made by the investors, looking at what most of the channels are saying. The other part of the decisions are left discretionary on the investor. So selling part is something that is extremely important, and that's where we as investors, retail investors, become extremely weak. It has happened to one with me as well just recently in one of the real estate stock, and many of on Patreon would know about it. So that is why it is very, very important that you take your own call, shut out everything, whether it's television or any kind of news that is flowing through. Take your own call, analyze yourself, and take positions. All right. So the next point I want to make here is about Nykaa. So Nykaa came out with its earnings yesterday, and this is what I was expecting. So basically, Nykaa came out with decent sales growth and sales of over 1100 crores, which is quite decent, quite reasonable, quite big. But what happened along with that is the fact that the profits have shrunk. So what has happened is that profits have come out to be around 27 crores versus a larger profit last time around, and it seems like their profitability is shrinking, and maybe because of the fact that the company has been, you can say, spending a lot, spending on marketing, spending on other kind of stuff. uh, the business is getting hurt, and what is happening is that uh, you're seeing that uh, the bottom line is getting hurt. So what has happened is 27 crores of profit might easily become 13 crores of profit and then go into losses. I believe Nykaa is expensive. We should be looking at a situation where the stock should be trading somewhere around 75,000 crore market cap now. That said, I think that would be price level closer to 1500 if anything. So right now it is 81,000 crores. If you say 6-7% down, so it would be around 1600. So around 1600, Nykaa becomes very attractive. So if you look back just about a couple of weeks back, a week, 2 weeks back, the stock was trading around those levels. So around 1600 becomes attractive just on the fact that it will be trading at 15 times earnings, which is not very expensive even for a loss making company. But what is more concerning is the fact that bottom line is getting shrunk quarter after quarter. What I believe is that October to December quarter would be big. So better to probably buy into Nykaa during the fall in August, September. I believe there could be continuous, you can say, movement of the market where the mid caps and small cap will keep on falling after a little bit of move. So in August or early September is the time to buy into it, and hold on to it from a 4 or 5 months point of view, and then probably take a call and probably sell in 15-20% profit whatever you make, and exit the stock before December quarter numbers, because December quarter is the biggest quarter for Nykaa, and I believe the same will take place this time around. So till that time, it's a complete avoid, and I believe that going forward, it will struggle for the next 3-4 months. This is February, so at least for the next 6 months, I don't see it crossing 2000, and I see it going gyrating between 1600 and 1800 in that time frame. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Uh, so let's see what are the questions that are coming in. Okay, so there's a question on Map My India and FL. So I'll take one by one. Map My India, again, a company that was ultra expensive and kept on moving higher, and now it is correcting because last quarter's numbers were not that great. So Map My India, which is CE Info Systems, is around 1500 rupees at the moment. One can start accumulating here, but do not expect a huge movement over the next 6 months. You can keep on accumulating. In my opinion, an attractive level to buy this is around 7,000 crores. So another 15% from here, maybe around 1,300 or so would be a better level. Again, numbers could stay subdued going forward. So one needs to be careful buying it. These valuations, probably look at buying around 1350 to 1300 levels. So that's on Map My India. FL, in my opinion, has come out with very, very strong numbers. So that's why the stock has regained momentum and has been performing well. But you need to understand that the stock is expensive. So around 1350 rupees, it was trading at around 85 times, 87 times. I think it will remain in this range because the market reaction for the results have already taken place, and results were very strong. But operationally, results were not that great, and that is why probably it got extremely sold, or it got sold into. So my opinion on Map My India is in avoid at the moment and wait for declines. And similar with FL, FL can be accumulated, but do not expect huge thing because the stock prices has already run up compared to its valuations in particular. Thank you, Advocate, and so for your contribution, your views on Happiest Mind and Divi's Lab. First of all, Divi's Lab is very attractive at these levels. Whenever there will be a pharma rally, and it will happen because there is always a sector rotation that continuously happens. So Divi's Lab, in 1 year, I have a target of 5,500 on it by next March or so. In terms of, you can say, Happiest Minds, I would say one can start buying, but I will not be so gung ho again that it will give you a smart return straight away. It's a 3-4 year play. It's at very decent value now after the fall. It's below 1100 at the moment. Remember, its EPS has been around 11 to 12 rupees. So it is trading at very expensive valuations. And that is why. So what has happened is over the last 1 month is extreme expensive valuation stocks have got hammered, and Happiest Minds has been one of those. So 1580 has become 1080, 500 rupees gone, some 30 to 33% gone on the stock. It is trading at 15,700 times. The EPS is around 12 rupees. Uh, it is trading expensive. I would say wait for another 10-15% fall to get in. You can start buying, but I see below 1,000 levels on Happiest Minds over the next 1.5 months. and I don't see the numbers improving sharply. So what has happened is that it's growing at 20-25% and trading at 90 times. So it cannot happen. It just cannot sustain. So it's an avoid at the moment. All right. LTTS, goodbye. Yes, it is. See, I would avoid IT altogether. The reason is the IT run up last year has been extremely huge, and even this year they have, in the first 2 3 weeks, they did well. So IT could take a back seat over the next 6 8 months. So if you are buying for the next 6 8 months, do not buy. Even if you're buying for investment purposes, I would say wait for even more declines to buy into IT. All right. So IRCTC, the results have been good. Again, a stock that has run up a lot. So just a talk on IRCTC is that they've come out with 2.6, 2.7 rupees of EPS. And I just look at the bottom line, and that is the most important part. 2.6 to 2.7 rupees of EPS multiplied by 8 to multiplied by 4 comes out to be, it would be around 10 to 11 rupees of EPS. Say 11 rupees of EPS for the year, trading at 830 rupees. It is trading expensive, 75, 76 times earnings. I don't see it going higher, and hence IRCTC is an avoid unless it comes to below 700 or closer to 700 levels. Those would be interesting levels to buy. See, Saregama tips both are good for long term, but you need to understand that something that has gone up 1.5 times, sorry, something that has gone up 15 times, 12 times, 14 times, you cannot think of it probably running up continuously. So look for value companies, look for value in this market, and you will be protected. Otherwise it will become extremely difficult for you to really make money, even by staying with top quality or good quality companies. So that's the call. What else? See, DMART at 4,000 looks decent. Again, if you have a 3 4 year view, these are good levels to buy. You could see 3,500, 3,600, but have some money to buy lower. But 4,000 looks decent on DMART. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And can you do subscribe to my channel? Thank you.